fodder for us today with Stephen Nash, who joins us from FIG Securities, because of course there's plenty of US news to get an update from you as well, Stephen. But with the minutes on Tuesday, there was this explicit reference to the bank funding costs. Do you think this is something we'll see more of from now on?
Look, I think the RBA had commented previously with regard to the marginal cost of bank funding. So what they were talking about is how bank funding had changed in the short term, and what they'd said is that it's stabilised. But the other aspect is important to note as well, and that's the average cost of funding, where the banks have to replace old debt with new debt. And the fact is that funding costs have risen substantially after the GFC. Why is that? Well, investors are now more cautious about buying any corporate, including a bank, and they're charging a higher, effectively, insurance premium to buy that. So, yeah, I think that's quite a significant acknowledgement by the RBA.
Sort of almost, though, alongside that, they say in another breath, though, when you look at the consumer and demand, they're saying consumer sentiment remains at high levels, and it's a good time to buy major household items. We've just been talking about numbers from our retailers ahead of Christmas. Are they kind of reading the tea leaves accurately or not?
Well, I suppose it's partly, I suppose, with a view to justifying the move that they've pursued.
But you can't sort of doctor the sentiment in order just to fit your decision, can you?
I think a fair read of the mood in the market or sentiment is Sydney Morning Herald on the weekend. The mood is tense. I think the mood is tense. That people have this extra funding that they have to pursue now. I think this is feeding into a variety of statistics. For example, with the labour force figures we got the other week, we noticed an increase in the participation rate. People saying, well, that's all about the employment outlook's improving, so people are going in and trying to get jobs. But there's also this aspect of if mortgage rates are higher, people have to fund that. How do they do that? Maybe the second party has to go and get a job.
And so how do you think that explicit reference to those funding costs, how do you think that plays into decisions from now on? Does it do things differently? Is it kind of a change?
I'm not completely certain about that, but typically the increments that we get in the mortgage, standard variable mortgage, are 25-point increases. Maybe there's a case to consider lower amounts of tightening with a view to getting that 25 points rather than doing a 25-point tightening and getting a 40-point increase.
Would that be a huge shift for them to make? Can they do
look,
that?
it's just an idea. Yeah. I'm not sure. I think that the real impact is with that standard variable mortgage rate, so maybe it's something to consider. Funding costs are now, I suppose, a reality, and that there's effectively a multiplier effect in play.
Gail Kelly was saying earlier this week, CEO of Westpac, that the rollover of funding from that era of relatively cheap money pre-GFC looked as if maybe 2012 would be the peak, and she could then see maybe a sort of a decline then, and that could feed through into mortgage rates. So with that in mind, how consistent is that with where we've got interest rate settings?
Yeah, well, I think the expectation of a moderation of funding costs over the medium term, I think it's a fair one. Yeah. However, we've got other things happening right now, and I think that if anything, the marginal cost for funding for banks may rise, given what's happening in particularly in the European system, particularly with regard to the Irish situation right now.
And when people were pouring cold water this week over, it's only a peripheral economy, inevitably the cost of funding for everyone goes up. Even those other states that might have been keeping their houses in order, they still have to kind of, they feel the pain.
Yeah, I agree. It's a global problem. It's just not an Australian-only problem. Competition for funding in the banking system is intense and is going to get more intense.
You've been kind of trying to suggest to us as well that when you look at the European peripheral markets and the problems there's actually an equivalent in the US state bond market. This is quite interesting. Tell us why you're suggesting this.
I mean, does the US have its own peripheral market? And I think that is the underlying local and state markets. Everyone knows about the situation in California, but there's a lot of states that are under pressure in the states. In terms of funding, they have pension funding issues. There's a lot of things going on there that are really not getting much airplay right now. And effectively, the levels of government underneath the federal may be another issue that the US has to deal with.
Were
in the
you
medium term.
surprised that the candidates in California didn't, therefore, who had come from the private sector, the Carly Fiorinas of this world, didn't actually get the public on side, threw billions at their campaigns, say, well, we'll bring a market approach to this, and they were rejected?
Well, what does the market approach mean? That means being more severe, and I think people are really under pressure in California. It's a very large, it's a very important economy within the US, and
yet here we've got even a government today announcing pay rises for themselves when we're told this is an environment to actually, from the very top, institute even pay freezes. The private sector's done that throughout the GFC. If it's good enough for them, why not the government?
Yeah, well, look, I think there's a bit of catch-up. I mean, there's a justification to some extent, but I think you're right. The case for moderation is there. I mean, we've had the wage cost index coming out a little bit higher than people would have liked to see. We've got more data today on that. I think the forward indicators are that suggesting that wages won't break out.
Because that bloated government sector, ironically, contributes a lot to that overall wage figure that you've just referred to.
Yeah.
Now, how can the government go and criticise the banks when they've contributed to the inflation problem themselves?
Look, I think there's a case to address this bloated government sector. I think there's more effectiveness or efficiency reviews that probably could be done, and I think people are looking for that. But yeah, I think some element of catch-up is there, but it will be moderate, and I don't think we're going to get a wages breakout. I think that's what the RBA is really focused on at the moment. Yeah.
Stephen, we'll have to leave it there for today. Thank you once again. Appreciate that. Stephen Nash there.